Well, it has been a shocking weekend with an attempted assassination on President Donald Trump. And whilst I am not one who likes to get political, the fact remains that it has had some effect on the market, and therefore that is something that we need to talk about in today's video. Before we get into that though, I do want to say that my condolences and my prayers are with the victims and their families. Now, in relation to the markets, I believe that we are seeing a little bit of a move up in cryptocurrency because, as we know, Donald Trump is an advocate for crypto. Whether he says that just for votes or not remains to be seen, but he does publicly support crypto. And a lot of people are now saying that this assassination attempt has basically secured his position as the next president. That is why I believe that we are currently seeing a bit of a move to the upside in cryptocurrency. So in this video, I'm going to go through some macro levels with you, some areas to be aware of, and then we're going to try to break it down to the lower levels to decide where the market maker might take price when the market actually reopens in a few hours' time. So if you're new here, welcome. If you are returning, welcome back. Be sure to hit that like button and subscribe if you're not already subscribed. And let's get into this video. Having a look at Bitcoin on the daily time frame, we can see this chart has been untouched since last week, since my last update on Sunday with you guys, and price seems to be entering into the area of interest that I pointed out on that video. There's a couple of positives here that I will highlight to you. Number one being, after many, many days of being unable to reclaim the daily time frame 200 EMA, we have now had a nice daily candle close above it. And today's candle at this point in time, even though there's still 13 hours to go, has opened well and truly above the 200 EMA. That was step one if we were to have any potential upside. Does that mean that there isn't more downside to come? We'll talk about that in detail. But for now, whilst we can see upside and we can see that we have cleared the 200 EMA, it's a good sign and we should run with it. We are, however, entering the area of interest that I identified on my last show. That is this magenta vector right here. And the level is between 59,300 to 62,300. Now, if we make it all the way to the top of that vector, that is also going to be a retest of the 50 EMA on the daily time frame. And another level that we want to be aware of is the halfway point of this magenta vector, and that sits at 60,805. So considering we are currently in a short-term uptrend on shorter time frames, certainly not the daily, it's still lower highs and lower lows on the daily. But whilst we're in this short-term uptrend, these are going to be your key levels, either as targets if you're already in a long position, or areas to potentially open short positions if we get a good rejection on lower time frames in any of those areas. So personally, I'm not ruling out this third drop to happen just yet. However, I also know that it's not a guarantee because we do have some other bullish news that I'll talk to you about in a second. So I do think this area was a good idea to at least DCA into long positions, not 100% back in yet, but it was a good level to pick up Bitcoin under $60,000. If you're wanting to add to your Bitcoin position, I certainly did that, but I am prepared for it to still come down into this lower liquidation level. Now, when I said we had good news circulating, and that might mean that we don't actually come for this lower level, the good news that I'm talking about, of course, is the fact that the German government has run out of Bitcoin to sell. So that selling pressure is off the table for now. And in addition to that, when we have a look at the hash ribbons, they are starting to turn back into a positive position as well. Now, this isn't necessarily positive yet. However, they are coming closer together, as you can see, and they are starting to flip position. So it really represents at this point in time an easing. It doesn't necessarily represent the worst has happened and we're out of it. So I would still be cautious, but this is starting to look a lot better than it was looking a week ago. So that means that we have to be prepared for this lower level to not happen. In saying that as well, that doesn't mean other bad news is not going to come about that may have us seeing that lower level. So I think right now what you need to do is prepare for upside, use your technical analysis to tell you when is a good time to buy, but also just be cautious that the worst may not be over and have some dry powder in case you need to buy at lower levels in the future. And at the end of the day, if that never happens, what will happen to the price is that we will start to create positive market structures. So we will break a 50 EMA, we will create a higher high. Eventually the market will pull back and then create a higher low, and then it will take off from there. If that bullish scenario happens, then that dry powder would get put back into the market at this point. So whether the market goes up or down from here, it's still iffy as we don't have confirmation on a higher time frame of a change in trend, but you can still build a plan for both from here so that whichever one happens, it doesn't matter. You're just waiting to execute. And that's essentially what I've done. So if we have a look at the 4-hour time frame, the 4-hour time frame gives us reason to be cautious because we have this rising bearish wedge going on right now. And when we zoom out on the 4-hour time frame, you can see that since our top here at about 72K, we've had this big drop here on the 4-hour time frame. We then went into consolidation and we had our next drop here. Now that drop there did wipe out a lot of liquidity. So if you're trading retail patterns, this is a bearish retail pattern, and we've had multiple touches to the upside now. It's also currently at the 61.8 fib level. So, just be careful. The market could turn around on us next week, and it could still at this stage have us see lower levels. But when we trade the TBD system on this and we zoom into it, the 4-hour time frame has also given us this W formation right here. Now, this W formation is not a perfect formation simply because it didn't break the EMA positively with a green, powerful, high volume vector candle. And that's what makes me very, very cautious of it. But this is where we did execute on a long position, and we're currently still long until we have a reason not to be long. Right now, price seems to be recovering this vector candle right here, and we're waiting to see if it will come up further into this zone right here. But we also need to now be aware of these rejections, which I'll show you on the lower time frame in a second. But there actually are two options on the 4-hour time frame right now. Now, a lot of people keep asking me because a lot of you guys know that I caught a short position that I've been in for over a month now. So I think it was around here somewhere. And so I've been holding this short and I'm still in this short. Now, of course, I take profit along the way. So, don't be like, oh, you're giving profits back. No. I take profits every time I can count a level complete. And I'm just waiting to see if there is a third level that will give me my final profit on that short position. But in order to not lose that unrealized profit through here, I also took a long position on this peak of the W. So one of them is going to prove to be the right trend when the market opens this week. That is the one that I will continue with, and the other one I will close. Either way, if I'm giving back money in my short as this trend rises up, I'm also making it back on my long. So same. Now, what we really want to know is what can we expect when the market opens this week, as the higher time frames are really showing us two kind of possibilities, and they're not really giving us confirmation as to whether we are still actually bullish or bearish. So we want to go to the lower time frames and see if we can identify what's going on there. But before I do, I just wanted to let you know that if you are looking for trade alerts, as in you are learning to trade, or you're in this stage where you're not feeling profitable, you do want to learn for yourself, but you want to be making some money along the way, we do actually offer trade alerts inside of our membership system, and that might be something that you want to take advantage of. If you're wanting to learn this method in full, a TTC monthly membership actually comes along with access to all of our courses, all of our live sessions, which we do multiple of them daily with different traders, and we have a very active Discord where there are members and a full team of people that are trading and talking and helping each other out all the time. And myself and my team also post trade alerts according to this system as well. The entry, the take profit, the stop loss, everything that you need to know. But in addition to that, you can actually supercharge that and get yourself access to even more trade alerts with a TTC membership if you join CoinW. Now, CoinW is linked down below. It's one of our exchange partners. And with all of our exchanges, we offer very big trading fee rebates, and CoinW is no different. So you will get a 20% trading fee rebate on all of your trades if you use the link down below. But in addition to that, you can also get access to the CoinW professional traders trade alerts. And I'm going to show you some of them here. This is one of their near trades just about to hit the second take profit here. They give you the stop loss, the entry, the take profit levels. Everything is written out for you here. Have a look at how many trades these guys are posting every day. There are tons. There is no way that you cannot make money if you just follow along with some of these. Now, this channel is just their scalp channel. But for those who prefer longer term trading strategies, they also have a swing trading channel, and this is a really great way to help you to start to make some money whilst you're learning to trade and getting yourself into a position where you can make decisions for yourself. So this only comes with CoinW and a TTC membership. So the website is linked down below. Have a look at the memberships if you want to join, then you can do that, and also grab the CoinW link down below, because once you're inside the Discord, you can ask around and we will tell you how to get access to this channel. Okay, now having a look at the 1 hour time frame for Bitcoin, we have run a trend this weekend, which is not the typical price action. So therefore, it's kind of difficult to identify the trap traders. And really the best that we can do is look to previous unrecovered vectors and reassess how the price responds in that zone. So the higher levels that I told you about on the daily time frame definitely matter here. You can see that the 50% daily vector is just a bit above this current vector candle right here. If the trend continues to the upside, you'll be looking around the 1 hour time frame 800 EMA, which will also be around all of these vector candles right here. So that will be your next level. What we want to see now is what's happening with the open interest as the price is rising, because that can give us a little bit of a hint as to whether or not it's a trap. Now, there's a few things going on here. So we have rising open interest and rising price. That means confluence in the trend. However, we do not have rising volume. We wouldn't expect that, however, because it's a weekend. So if this was to continue to the upside, we would need to see the volume coming next. And if we have all three moving in an uptrend, then we are bullish for the time being. The other thing we want to know is liquidation levels. Where is the major liquidity? Looking over here on the Bitcoin chart, we can see that there is still that liquidity down here, the yellow down below price. It's sitting at about 51,800. It's always going to be an area that we have to be aware of whilst it's sitting there. Doesn't mean we can't go up before we go down. It's just something we need to be aware of. Above price, there isn't huge liquidity until we get all the way back up here into the, $72,000 region and beyond. So right now, the lowest hanging fruit is actually below price. And for that reason, I would still be very, very cautious when price does move up to just be zooming out, look at key levels, see if it's a move up just to take out a high level vector or a high level of liquidity before further downside. I really don't think we can rule that out just yet. Although when you hedge a position the way that I explained it to you, you really can't go wrong either way. But this chart really does tell me to just be cautiously optimistic for the time being. When we have a look at the weekend liquidation levels, this gives us a bit more of an idea of what's been going on over the weekend and where weekend traders might be getting trapped. The delta currently is to the longs, meaning there are more people that are currently long than they are short, and then that always becomes a target. We can see up here that we have still some liquidity above price, so price really could keep going up a little bit higher than where it is right now, but there is a ton of liquidity below price, and eventually, we will come for some of that. This large area out here kind of piques my largest interest. So when we add some of those key levels to this chart, we can now see that liquidity is right around the 800 EMA on the 1 hour time frame. So unless we reject from where we are now, which by the time this video comes out, you will know if we've rejected in this area or not, then we could come up here before we see any type of pullback. So here's how I would play this now. If I had no positions at all, this is what I would be doing. I would be very aware of the 4 hour time frame pattern that is happening. Okay, that being this bearish wedge that I showed you. And that would prompt me to go down to a lower time frame, either the 1 hour or the 15 minute. And if we cannot get any higher than the price is right now, I would be looking for a change in structure from here. So I would be looking for price to come down, give me a lower high, and that would be my hint that 4 hour time frame trade is probably likely to play out. Now that may only play out and end up being another higher low. So it may end up only being part of the false move week beginning. I'm not necessarily saying that if we get an M formation on the 1 hour time frame, we're going down to 51K. I'm saying that could bring on the false move week beginning. And if it did, I would ride that trend down and I would reassess it at the changeover of Asia session into UK tomorrow. And if the trend remained through that changeover, then I would also reassess it again at the changeover from UK into US. If either of those two changeovers don't give me a change in trend, then I will stay in my short position. And if they do, then I would assume that was a pullback to create another higher low, and that what is in fact in play is this W formation with a rise, a retrace, a rise, retrace, and there should be at least one more to go. For my long-term investors and traders, is it the time to be buying back into the market? Now, in my opinion, I think anytime Bitcoin's under 60,000 is a good time to buy. 50 to 60, DCA, don't have to worry about it. If we're lucky enough to get down into the 50s, then all of the orders will get picked up, and we're holding for the long term anyway, so it's fine. The opinion is a little bit different when it comes to altcoins, however. Some altcoins are showing promise, but we need to look at the market as a whole first. So when we have a look at the total 3, this is why I feel pretty good about Bitcoin. Sorry, not total 3. The Bitcoin dominance. The Bitcoin dominance is in a bit of an ascending triangle. It's holding the 200 EMA. It's kind of looking okay. You know, as it squeezes more and more into this triangle, eventually, if it breaks out to the upside, then you're going to be very, very happy that you were buying Bitcoin every time it was under 60K. So for me, I'm more than happy to continue dollar cost averaging into Bitcoin when I see a chart like this, and I'm prepared for it to go lower than what it is now. However, when I have a look at the total market cap excluding Bitcoin and also excluding ETH, so I'm looking at total 3, it's a little bit of a different story, but I am in two minds about this chart, and I'll tell you why. First of all, if we're simply looking at a trend line, then you can see that this has broken, and we've been creating lower lows and lower highs ever since. When I take that trend line away, because I personally don't trade diagonal lines anyway, so I usually just mark them to understand what everybody else would be thinking, but they're not really a consideration in my personal decision making. So when I remove that and I'm looking only at horizontal lines, I pretty much have a full reset here. So I have resistance here that we hit up against a few times, and we came back and we broke through it. We retested it as support here, and we've come back to retest it as support a second time. So when I'm looking at horizontal levels, I now have a resistance flip into support. And that's actually can be bullish, but I don't have a change in market structure. So what I would be looking for on this before I'd be willing to really kind of, go back heavy again into altcoins will be to see if this can now change the structure. And I'm essentially just looking for a higher low. That will be my first hint. If that follows through with a higher high, then again, that's the second hint right there, and I'll feel a little bit better about altcoins. Now, I have dipped my toe in this weekend into some altcoins that I said to you I believe are looking fairly decent, but these are only spot trades, and these are the long-term things for me. And considering I pretty much sold out when I believed that this whole move to the downside was going to come, I'm now essentially just putting my profits slowly back into the market. So I do have a hell of a lot of dry powder to play with, and I can be a little bit more, aggressive, risky than the average person. So the first thing I'm looking at is Ethereum. Now with Ethereum, we do have a really large level of liquidity below price between 2380 to 2800. And we have a look at the heat map right here. That is this 3-month liquidity down here. So just be aware of that entire zone. The good thing about Ethereum is it's holding this support. It didn't create a lower low like Bitcoin did. In that move down, Bitcoin created a lower low, but Ethereum pretty much just came back to its support. However, the bad side is we do have lower highs. So we need the change in structure for this to be a good buying opportunity. Not a bad idea to buy off support when it holds. So I did DCA there, but I am waiting to see if I can get a higher low before adding any more to Ethereum. And when I have a look at ETH BTC, it's essentially just consolidating, but it's consolidating after this move to the upside. So if this is going to play out in levels and rises, then this should be a level 1 rise consolidation, and then there should be another rise out of it if it breaks below the support level of this consolidation on the Bitcoin pairing. If it does that, I probably won't buy more Ethereum. I'll be waiting to see if it comes down into one of these lower fib levels and gives me a bounce out of there. Solana is another one that I'm looking at again, because here we have a resistance. We broke through. We've tested that resistance now, and as support, it has been holding as a support. There is a bit of a W going on here. We dipped into some liquidity that was there prior, and this is what is left. So initially this was up here like that. So because we dipped into that liquidity area, I did pick up some more Solana. With Solana, I can afford to be very aggressive because my average entry on Solana is down here at $15. So, you've got to know your own personal situation. But if I make a mistake and Solana comes down even more into, say, this region, if things got really bad, I'm still going to be okay because my average entry is, still going to be fine. However, when I look at Solana's heat map, it also gives me a reason to be a little bit more aggressive. You can see here that there really isn't a lot of liquidity below. So the only thing that can take Solana down pretty much is if Bitcoin has another really, really big dump. But even still, there has to be liquidity for it to have a massive effect. And it's just simply not really there right now. If we have a look at the weekend traders on Solana and see what decisions they've made, see how we still have this liquidity down here. These are obviously people who have gone long, but there's still more liquidity above price. The spikes are a lot larger. When we have a look at the market structure on its own, there is a reason to be a little bit cautious. And that is that if you count this as the W formation right here, then we have not come up to the center peak of that W yet, which is what you want to see the right side do. So we need to come up to this level at least, which is at about 154.40. We need to come up to it. We need to break through it. And then we need to come back and create a higher low. That's where you would then deploy a little bit more. That's when you start to get aggressive and start to think, okay, the market structure on Solana on a higher time frame is changing. That makes it a good time to buy Solana. And the concern with Solana is when you have a look at 𝗧𝗿𝗃𝗵. So it's really just chopping. It's really quite sideways. So I'm also looking for a change in market structure before I get too excited on Solana. Now, Link is another one that has caught my eye. My average entry currently on Link is $7.10. And I'm looking to add to this because I did take some profit before it moved down, and I'm looking to put that profit back in. So this area here does concern me because it's a really fast move out into the upside. And so I'm really aware that if the market was to remain bearish, that we could come back around into this zone. But so far, we have not broken the support at around $11.65. And we have a very big area of liquidity in that zone as well. So that is at about $10.10 to about $12.20. So if we happen to come back into that zone as well, look for market structure to change in there. However, if we stay away from that zone, then you're essentially doing the same thing. So you're looking for this to move out and then to change the structure, and that's where it will be another time to buy into it. Now, INJ is another one that I am eyeing off. Look, the market structure on this is not good yet. So I'm not saying to buy this one right now, but I'm saying it could be close to changing the trend, and only buy this if that is confirmed. But it is worth putting alerts on and keeping an eye on it because it could be in an area that is going to present a good buy should the market turn bullish from here, which, a reminder, I'm not 100% convinced on that yet. And all I'm doing really is planning ahead. So the reason why I say keep your eyes on INJ is because we have this big cluster here of consolidation before price broke out last time. And we have come back into that. Now, prior to this red candle right here, this liquidity zone was up into that wick. So we've taken out half of that liquidity already, and there is more left down below. Now, that could mean that that spike there took out what they already wanted to take out, okay? So they may not come for this lower liquidity. If the market structure changes from here, that's where you would assume that they're not coming for it and it's safe to buy in. But just keep an eye on it, because if it does come down into that liquidity, there isn't, again, very much below price for them to come and take. So this is a zone that I'm looking to see a couple of options of what might happen. There is a lot more liquidity above price. And so again, that is why it sparks my interest. But what is lacking right now, why I'm not taking action just yet, is because the lack of volume in this, okay? So since this little stop hunt right here, we haven't had a really strong move out into the upside. So there's a couple of scenarios. We want to see some movement out from where it is now. I don't like the wicks to the tops of all these daily candles right here. It doesn't look good. If some volume can come in and then we have a retracement from there, then these two, a buy zone between these two prices right here is probably going to be a good area to pick up some of this. And then if that were to happen, that's when you would expect that it's going to, at the very least, come and take some of this liquidity above. If that doesn't happen, so if we don't get that change in market structure, then right now what's happening is we are creating lower lows and lower highs. So we would expect that it's still going to continue doing that until it's taken all of the liquidity. Let it do that and then look for the change in market structure. So it really doesn't matter about the price. It matters about when we go from lower lows and lower highs to higher lows and higher highs. It's actually, that's really all charting is about. Now, all of those coins that I covered are available on CoinW. So again, if you're wanting to learn this method, the link to TTC is in the description down below. Grab your new account with CoinW, get yourself that 20% trading fee rebate, and get yourself access to the CoinW Pro Traders trade alerts inside of our Discord.